Alright guys, so we're gonna see Apple's earnings, so hopefully it does well. I own a lot of Apple stock, so it'll be beneficial for me if they beat earnings. Getting set up and then we're good to go. Okay. Okay, hopefully this is working out well. Let's see chat. What's going on with chat right here? Hey, what's up, Yug? How you doing? All right. So let's see how Apple does with their earnings. Once we see how Apple does, we can get good news all around. Own a lot of Apple stock, so it'd be beneficial if it does well for me. Okay, hopefully everything's good. When did you call? What do you mean, when did I call? See how this goes. What do you mean? Wait. How are you confused what this is? It's an earnings call. Apple's earnings call. You know, it tells you how well the stock company does. And Amazon and Facebook and Google all report earnings today. Huge. Not sure how you confused. If you're an investor, you should know what it is. Alright. See how the stock market closed today. right here. Be good. All right. Well, we'll see how Apple and Amazon and Facebook and Google does today. It's gonna be huge how it goes. The Apple get the latest. Thanks for all the follows and subscribe, guys. Appreciate it. Let me see if it works. See if the subscribe works. Okay. That works. Okay, yeah. Box right over here. Okay, we'll find out how all these company does. Yeah, Facebook pushed back theirs to today, so we'll see how they do. Let's add Amazon, AMZN. Can you do 2? Yes, and then you can do Google, which is what? What is Google? GOOGL. Actually, what is class C? GOG? Yeah, maybe we should just go GOG. Okay, let's see how it does. Alright, we're gonna see how it does. Don't forget, break the like button, everyone. I appreciate you guys. Break the like button. And you guys share the stream. I appreciate it. How many of you guys are brand new? So, let's see how it does. Let's see how it does here. So we got Apple, Amazon, Google, and we'll do a Facebook too. We'll do Facebook. We'll add Facebook to it. Yeah, I would invest in Kodak, man. Too much going. Here we go. The stock market closed. Let's see if they did it. Let's see if they beat their EPS. Appreciate you guys smashing the like. Can you guys see if the subscribe or the donation button's working? The second time I started live streaming, I'm not sure the stars. See, can you guys see if the what's it called? What's it? Super chat's working for my streams? How much Amazon I got? I used to own 20 shares of Amazon and I sold out of it and then I bought different types of shares. I sold it around 1,600 and I bought it around 1,400. I made a mistake. But you know, I used that money to buy more Apple, Tesla, Microsoft, so other companies, so it still did well overall. Let me know, I call 40 PE for Apple on this channel, yeah. Hey, can you guys hear me okay? Is the music too loud or is the voice call okay? Alright, here we go. Let's see. Alright, here we go. That's our tech. Any tech? Earnings. Alright, we'll see once they report numbers if we see any of these things spike up right now. If we see these numbers spike up, we know, or go down. So Facebook up 7%. What did Facebook do? Facebook is up over 5% after hours. Did they crush earnings? I bet you Facebook beat their earnings. So Facebook did well. Facebook is up over 5% after hours in trading. So Facebook beat their earnings. Okay, so we know Facebook beat their earnings today. Congrats to you guys who own Facebook. I used to own $20,000 worth of Facebook and then I sold out of it. The stock was too stagnant for me for like a whole year. I was like, the stock hasn't moved anywhere, and I sold it. And now the stock finally moves up after I sold it. I appreciate all the likes and the share, guys. If you guys have like $1 or $2 or $3 to spare, if you guys can check Super Chat, and if it works, first time live streaming, I want to see my notifications working on the stream. So you have like $1 that you can spare. I appreciate it. CCX might merge with Top Golf. No, I didn't hear about that. Okay, so let's see. Facebook shot up. Let me see what Facebook did. What their EPS was. How much did they crush it? Facebook earnings after market. Facebook up almost 100%. Facebook earnings. Here we go. So Facebook daily active users 1.79 billion versus 1.74 estimates. So that means almost 40% of the whole world use some type of Facebook platform. Their revenue, they beat it by $1 billion. Oh my gosh, they beat it by 1.3 billion. So Facebook beat 1.3 billion. Their EPS $1.8 a share, and they beat it by hand over fist. Dang, dude, Facebook did well. Holy crap, Facebook crushed earnings. So if you own Facebook shares, congrats, dude. That thing's popping off right now. So Facebook, dang, guys. Facebook popped off today. Look at that. Facebook up over 5% after hours, so let's see. You can see Facebook did very well. Facebook earnings $1.80 versus estimates of $1.39. Quarter two revenues 18 billion, 69 versus 17 billion. That's huge. Facebook totally crushed their earnings. And then you can see Mark Zuckerberg very happy right there. Look at that. Look at how happy Mark Zuckerberg is. All right, let's see. Amazon is up too. The AMZN. Take a look at Amazon. Breaking. Amazon buys the rest of the S&P 500. Amazon, Google. Hey, Amazon reports. Okay, I don't know if this is accurate. Amazon reports quarter two, $10. That's not right. No, that's not right. No way. They beat it by $9? No, that can't be. No way. Are you serious? Holy crap. Oh, $10 a year beats estimate by $7 billion. Holy crap. Look at Amazon. It beat their revenue by $7 billion. It's trading up after hours right now. So Amazon did well. Look at that. Amazon crushed their earnings, dude. Jeff Bezos is more rich than he ever was before. So congrats if you own Amazon. You guys totally crushed it. Facebook beats earning, Amazon beats earning. Now we're waiting for Apple. Now we just gotta wait for Apple's earnings. Look at that, dude. Hey, you guys, I appreciate all the likes and the follows and the shares. Let me know if you're brand new in chat, guys. All right, so Amazon totally crushed their earnings. Look at that. Jeff Bezos. How did they generate such revenues, dude? Quarter 2 EPS was $10.30 versus $1.05, dude. That's insane. That's absolutely insane. Yeah, that's absolutely insane. Hey, can you guys do me a favor? You guys have $1 to spare. Can you guys see if the super chat works on the stream? I don't want to see my notifications working. I appreciate you guys have $1 to spare. So it looks like Facebook, Amazon, Apple's up 2%. Did Apple crush it? Here we go. Let's take a look at Apple. If Apple crushed their earnings. All right, let's take a look at Apple. Apple. No news on Apple yet. However, Apple is up 2.3%. They're up 1% after hours, but we haven't had earnings. So we know Facebook and Amazon beat their earnings, but we don't know what Apple or Google is yet. We're still waiting on Apple and Google. You bought 1000 Facebook at $18. Yeah, nice. Yeah, if you bought around 140 when it went down to 140, that'd been a good gain for you guys. But we'll see. See how it goes. Hey, pal, thank you for the $1. Did the notification go off? Did you guys see if the $1 went off on the stream? Did the super chat $1 go off on stream, guys? Okay, Apple and Google. That's incredible. Look at Amazon, dude. It beat EPS $10.30. Estimates was $1.50. You know how incredible that is? You beat EPS by a whole $9. Yeah, you saw it go off? Okay. Thank you guys for seeing super chat. Hey, Archie, thank you for the $5. Archie and Pal for the $1. Thank you guys so much. Did the super chat go off the stream though? That's my question. I don't see it going off on the stream. There you go. Okay, so yeah, notifications go off. There you go. Appreciate it. There you go. It's a little bit delayed. Thank you so much for the $5, Archie. Appreciate it. So let's see what Apple did. Did Apple report or Google report? The Google is up 2% after hours, but there's no news that they beat their earnings. To Apple, Google. See how Google's doing. No news of Apple or Google yet, guys. We got Amazon beating it, Facebook beating it. Both of those companies did very well. So if you own Apple or Google, you guys did good. Yeah, you see on YouTube? All right, thanks, guys. Thanks for checking out to see Super Chats working. I appreciate the $1, Pal, and Archie, thank you for the $5. I'm kind of curious, guys. Since you're watching me, how many of you guys were already subscribers, and what video did you find me on? And if you're brand new, how did you find this page? Thank you for letting me know, guys. All right, let's see. Apple and Google. Apple and Google. We just need Apple and Google left to see. Both waiting earnings. Okay. See what Yahoo Finance says. All right, let's take a look.
Pretty much in line with what the company is seeing in its North America business. And they did turn a slight operating profit internationally in the most recent quarter, $345 million, but that's been a loss maker for the company over the last few quarters. And so, with a surge clearly in orders, the company being on the top line and guiding up, the international business is able to ride some of those positive trends for a more quality quarter here for Amazon in its second quarter. Again, the stock is popping after hours in line with Facebook. Seems like it's all coming up roses for the big tech guys. Shauna.
Yeah, 2 for 4, Miles. Just wanted to jump in here really quickly in terms of these earnings. And you mentioned the stock's up over 4% after hours. And I'm looking at Bloomberg's Billionaires Index. Jeff Bezos, the world's richest man, now worth $180 billion, nearly as much as number 2 Jeff, number 2 Bill Gates, and number 3 Mark Zuckerberg combined, nearly. Interesting about his wealth, too. I loved it when he got divorced, what was that, last year, and paid tens of billions of dollars to his now ex, Mackenzie Scott, who has just made a big philanthropic move this week. And people were crying that he was so poor. He's now wealthier than he was before he got divorced and had to pay out the big settlement. Yeah, it's crazy stuff.
How do you pull that off?
What's that?
Dang, dude.
I wish I knew how to pull off that trick. I could have used it at one point in my life.
Okay.
All right, let's go back to Amazon's business and move on from the divorce proceedings here. I just want to talk a bit about something that came up a lot yesterday during that hearing, which is third-party sellers. And the company just seeing really rapid growth in this part of its business, faster than any other of its major business units. 18 in revenue from third-party sellers during the second quarter for Amazon. That's up 53% over the prior year. The growth rate in the first quarter was 31%, and that was an acceleration from what the company had seen. So that third-party business, which caught so much scrutiny from lawmakers yesterday, really, kind of eyeballing it here, the crown jewel inside of Amazon's, kind of core businesses, online, physical, third-party subscription, and AWS as they break them out here. Subscription service revenue is up 30%, basically in line with what we've seen, $6 billion. AWS growth,
dude, they spent $4 billion for protection against the illness,
from
dude.
AWS, again, $10.8 billion. And as you'd expect, physical retail, those sales were down 13% to $3.7 billion in the most recent quarter.
Yeah, it's interesting there, the slowing AWS growth of 29%, because even though that is pretty significant, similar to what we saw from Microsoft when we did see slowing growth with their cloud business in Azure. But again, very interesting. And Miles, I'm happy you brought up their third-party numbers as well, because when you take a look at that number, the $18.2 billion in revenue just really highlights how important that third-party business is to Amazon here going forward. All right, we're going to take a quick break here in the final round, but we'll come back.
All right, Google beat earnings, guys. So we got Google.
Google and Apple, well, all that when we come back after this quick.
So we got Google beating earnings, guys. So Google's numbers are out, so we're just waiting on Apple. So here's what Google says. Google's numbers. Did I mute everything here? It's all muted? Yeah. Okay. So let's take a look at Google. Google beat their earnings as well. Here we go. So Google's estimates. Google revenue was 38.3 billion versus 37.34. So they barely beat their earnings. Google barely beat their earnings, but they did beat it. Okay. So it looks like Facebook, Amazon, and Google all beat their earnings. So Google did beat estimates. Their EPS was $10.13. Estimates was $8.21. So they beat both on the EPS and on the revenue. So that's good news if you're a Google holder. So looks like Google. Congratulations if you own Google. You guys did well. Look at that, man. That's amazing numbers on Google. Wonder if they're still doing buybacks. So it looks like all these tech companies did very well. You guys should be happy if you own any of these stocks. All of your stocks performed today. I own Google. I own Apple. I used to own Facebook and Amazon, but then I sold out of those recently. Oh, that's good. So let's see what Apple. Did Apple report yet? Anyone got Apple's reports yet? Anyways, guys, thank you so much for subscribing. I see these subscribings going off. You guys are doing a great job. Thank you so much for liking the videos. If you guys have $1 to $2 spare just to see my super chat's working, to see if the super chat donations working, I appreciate if you have $1 to $2. I appreciate that. So let's go ahead and still see what Apple is doing. We're still waiting on what Apple. Here we go.
Here they are. Second quarter EPS coming in at $10.13. The estimate was for several dollars lower at $8.27. Looking at revenue, when you take out the traffic acquisition costs, $31.6 billion. Estimate was for lower, $30.45 billion. Operating margin coming in at 17%. Estimate was for 15%. Then you go down the various properties from YouTube ads to Google properties, Google Cloud, other bets. All beats here when it comes to revenue. I'll just give you YouTube because that's been focus, especially since they started breaking that out, and it is advertising dependent. That came in at $3.81 billion. Estimate was for a little bit lower at $3.76 billion. And then their silo, their big warehouse operation, which is Google Properties. That's where their most of the revenues come from. That's $25.13 billion. Estimate was for $24.55 billion. And just a couple of other stats here. They are agreeing to buy back up to an additional $28 billion in their Class C capital stock. These tech companies, these tech behemoths have been some of the few that are.
They're doing a $26 billion buyback on the stock. That's huge.
Apple, another
That's
notable
huge.
one. Amazon, not so much.
Google's stock price is going to go up.
Here, accompanying the release, second quarter reflected gradual improvement in ads, strong growth in Google Cloud, and other revenue. And by the way, that cloud revenue.
Oh, you found me through Workhorse. Thank you for subscribing.
Billion, just besting by about, looks like $100 million. The estimate was for $3 billion. And I just add, on the call, it's going to be interesting because Sundar Pichai, he got the most questions from Congress yesterday. And he got kind of tripped up towards the end. We've been talking a lot about that. So be interesting to see if anything comes about that on the call. But again, looking at the stock here, it is up 1.7% now. So trending a little bit higher in aftermarket trading.
Okay, we just need Apple.
Getting a little bit of a boost here. But again, it's interesting taking a look at the reaction in Google's stock price here after hours, a little bit more muted than what we initially saw from Amazon and Facebook. All right, Jared. Jason Ware, he's CIO of Albion Financial. And Jason, let me just get your thoughts on the results that we've gotten so far. We've heard from Facebook, we've heard from Amazon. We just got Google's results. Given the rally that we've seen in these names and their high multiples, what is your reaction to the numbers that we got?
Yeah, I mean, Amazon is a big wow, beating by 8 billion on the top line, which was already a high bar given the expectations that they've benefited handsomely from the pandemic, that is in their e-commerce and in their cloud business. That was a really big number. And, the beat on earnings for Amazon, and Amazon is a volatile, the earnings are a volatile number quarter over quarter because they spend so much. I mean, last quarter, you remember they put $4 billion, all their profit, into COVID related investments and expenses. So the earnings number is always a bit of a moving target, but that top line number, which is something that we focus on at Amazon very intently and have for years, was a big one. Google looked good across the board, not quite as breathtaking as Amazon, but good enough.
Amazon's up over 7% for the day, dude. Look at that. Amazon, $3,000.
Maybe a step down in
3,200.
There certainly was relative to their longer term trajectory, but it wasn't as bad as expected. Revenue down about 2% year over year. We'll take that. Facebook we don't own, but the numbers look pretty good. We used to own it. A number of reasons why we sold it, but it looks like they're doing okay as well.
Yeah, Jason, I wanted to ask you about that since you do own the other two stocks that we were talking about. I know you also own Apple. You don't own Facebook. What would get you to buy? What are you looking for? What are you not satisfied with in the company?
It'd be a change in culture. I think the business is doing really well. but the culture at Facebook, I think, leaves a lot to be desired. Some of the ways that they've handled data privacy, some of the ways that the way they handled the Cambridge Analytica issue was concerning to us. Some of the things that they were doing to encourage usership on their platform was less than above board in our view. So that was one of the reasons, the main reason why we sold it back a little while ago.
Jason, these tech companies, they've been favored here amongst investors.
All right, we're just waiting on
but
Apple.
as we look ahead to the rest of this quarter and then going into the fourth quarter, do you expect money to continue to flow into these names, or where else do you expect it to go?
Yeah, it's a great question, and I think that these
That's
numbers
good for
today
now,
certainly,
Yahoo Finance. Thank you. All right, guys. So we got Google, Facebook, and Amazon all beating their earnings, and those stocks are going up. All we're waiting for right now is Apple. Once we hear Apple, we'll see if all of it does well. Look at this. Facebook is up over 8.5% right now. That's insane, guys. Facebook is up 8% right now. Amazon's up 6% after hours. Apple is up 2.3%. Microsoft's not doing anything. Google's only up 1%. So we're just waiting for Apple right now. Once Apple shows they can beat, then that means today was huge. Today's been a good day for all the tech stocks. All the FANG is doing well. So that's all we're waiting on. Incredible. Absolutely incredible. So I'm kind of curious. Everyone in chat, tell me which stock you own for these companies and how many stocks do you own? Kind of curious. And I hope a dividend growth. I hope they announce like, hey, we're going to increase our dividends. Dividends for everybody. That'll be cool if they increase their dividends. All right. Logitech. Okay. Facebook, Amazon, Facebook, Apple, Amazon, Cirrus Logic, Apple stock. You own VTI. 5 stocks of Apple. Okay, so you guys all own a little bit of it. Yeah. Let me know what state and country you guys are from. What state and country are you guys all from? Okay, we're still waiting on Apple, man. I mean, Apple is... I mean, look at this. Look at how crazy this is. You got Amazon. Amazon beat their earnings and their stock is over 3,220. I bought 20 shares Amazon at 1,400 and sold at 1,800. So, man, I can't believe I sold out on Amazon back then. Sold out Amazon when it was 1,800. I mean, look at Facebook. If you own Facebook, look at this. Facebook's at 251. They're up 8% on the day, guys. They beat their earnings as well. That's incredible on Facebook. Now, I mean, Google's not up that much. Look at Google. Even though they beat their earnings, their stock barely performed today. Only 1% with even good earnings from Google. Now let's go ahead and we're just waiting on Apple here. Oh, Apple's up. Apple is up. Apple earnings out. Let's see what Apple got. Apple is jumping right now. So Apple, still waiting. Why is the stock up 4%? Come on, Apple. Apple is up. Why is Apple up? Look at this. Apple is up almost 4%. 5% after hours. What's the report? What's the report on Apple, guys? All right. Do we have news on Apple? What's the news? Here we go. Apple. Apple just reported. I got the numbers, guys. We got the numbers. Here's Apple. Apple reports quarter 3 EPS $2.58. Okay. EPS consensus was $2.04, so they beat it by 54 cents. And then consensus. And then they got $59 billion in revenue, 59.7, and the consensus was 52.25 billion. So that means Apple, Google, Facebook, Amazon all crushed their earnings. All 4 of those stocks did it, dude. That's absolutely insane. And you know what's interesting? Microsoft did it too. Microsoft beat their earnings and their stock went down. So dang, guys, look at that. Apple is up 5%. 6%. Look at that. Apple is jumping up right now. Apple is blowing up, guys. Here we go. Let's take a look what they say.
Split here. The stock closing in the mid 300s today. So that stock will be, I guess, about a $90 per share stock or so once the split is effective. We'll be back to you with more information when we have it, Sean.
Yeah, Miles, going through some of these other numbers that I'm seeing here, looks like their iPhone estimates beat for the quarter. iPhone revenue coming in at $26.4 billion. The estimate was for $21.3 billion. Also, their products revenue of $46.5 billion. The estimate was for $38.3 billion. And Andy, Miles laid it out. The huge headline that we're getting here from this report is this 4-for-1 stock split from Apple. And I think there was some speculation as to whether we would see it from companies like this, but Apple making that big announcement today.
Wait, is Apple stock splitting?
This is a whole thing going on, trying to disintermediate those guys who've been like selling these partial share things. And, basically a lot of people were following Buffett's lead by never splitting your stock. And then Buffett had to disintermediate those guys with B shares. Other people don't want to have multiple classes of stock, although of course Google's already done that. But I'm not really surprised about that. It'll be interesting in the call to hear about new iPhones. And of course, with the closures, I think
4-to-1 stock split. Apple is splitting their stock, so the stock will be at $100. More people will invest.
To be working at home, et cetera, et cetera. China's a big question for them going forward. And they are definitely a little bit different from those other 3 stocks, the other 3 companies. As the company likes to point out, we make stuff and sell real stuff as opposed to some of the other services companies in the social media platforms.
That's great for Apple shareholders. You're getting a 4-to-1
Andy,
stock
just want to come
split.
back with a few more numbers on Apple's quarter as we go through the release here. The services business, $13.1 billion in revenue there. That's actually a bit light relative to what the company reported last quarter, which was $13.4 billion on the services side. And so Apple actually making up for what was a flattish sequential period on the product side, where revenues were $46.5 billion in the most recent quarter. And just going through the geographic breakdown and comparing it to what we saw in the first quarter, most of the increase was in the Americas business. $27 billion in revenue in the Americas business during Apple's third fiscal quarter, which is the quarter ended June 30. $25.5 billion is what we saw in the last quarter. Europe was flat, 14.2 this quarter versus 14.3. China was flat, 9.3 in this quarter versus 9.4 in the last. And so just looking at Apple's growth driver right now, it was, I guess you could kind of impute that it was people in the U.S. at home buying stuff, buying iPads, buying Macs, buying new phones. The rest of the business performed fine, but was mostly flattish compared to last quarter.
Yeah, just one quick thing, and this is the big takeaway, Jerry. We're going to go to you because you got some really good stuff here, but they beat by $7 billion. I mean, a top line. That's pretty damn impressive. Okay, Jerry.
Apple beat by $7 billion, dude.
Split, because that's getting some attention now, and the effects that it's going to have on the indices. Now, with respect to the S&P 500 and NASDAQ, that's not going to change. Those are market cap weighted or float cap weighted, but the Dow is price weighted. So Apple's trading at $404 right now. You can divide that by 4, so it's only going to be contributing one quarter as much to any advance or any decline. And you can argue whether that's good or not for the index overall, that it doesn't become too saturated with one name. But I'll just say when Boeing rushed up from about $100 to $400, they definitely didn't do that. And when Boeing crashed, it hurt the Dow. So this could be conceivably good for the Dow in terms of just balancing things out. We'll have to see what happens going forward. But with a market cap like this company has, it's going to definitely be, its presence is going to be known in the other indices.
Yeah, well, certainly. I mean, it will be interesting to see if it becomes more of a favorite here amongst retail investors as it becomes a little bit more affordable here to buy some of their shares. So that, of course, could influence some of the moves here, at least in the short term, for the stock. But I want to bring in, we have a special guest here for Apple's results, and I want to bring in Daniel Flax, he's Senior Research Analyst at Neuberger Berman. And Dan, let me just get your thoughts overall on the numbers that we're getting from Apple. We can talk about that 4-for-1 stock split. We could talk about the fact that it's better than expected results. And I think there was some worry around the iPhone number, but it actually looks pretty strong for the quarter. But Dan, you're going to have to unmute.
Dude, it's crazy. Apple, Google, Amazon, Facebook all crushed earnings today.
A robust set of numbers considering the environment that we're in. I think the key here is really this broadening of the revenue drivers. You've got the iPhone franchise, which is proving, I think, more durable than some of the skeptics would have you believe, even with a sluggish smartphone market. The iPad, the Mac, wearables, I think, is a really exciting area. So on the product side, the company is continuing to deliver. We had a new iPhone SE. There's the new iPad Pro. So healthy set of results. Again, though, given the environment, I think the key is execution on the product cycles and continuing to delight customers.
Hey, Dan, that all looks pretty good right now. We got Apple above $400 here for the first time, but we have a call coming up and a lot of news can happen on this. People are really interested in the trajectory for a 5G phone. Could the call pour a lot of hot water on what we're seeing right now?
5G?
Jenna,
their next phone?
think as we know, Apple is not going to comment on future devices. And so it is, of course, likely they're going to have a 5G iPhone later this year. It's probably going to be delayed relative to launches of devices.
No, I don't think Apple is going to launch 5G this year. Probably next year.
And the global effort has been hampered, obviously, by the pandemic. But I think what's important when you get an iPhone or a new iPhone later this year, and as we think into 2021, is that this integration of hardware, software, and services, the application ecosystem, that is what's really helpful to enabling Apple to differentiate. So I think it's important for the stock, but I would go back to the earlier point that we talked about, which is the diversification.
Hey, thank you so much for subscribing. Appreciate the subscribe, guys, and those who hit the like button.
Yeah, Dan, let me ask you more about that diversification, because you mentioned the fact that the wearables it's exciting here at least, but how significant of an opportunity do you think this is for Apple, and how big of how much do you expect it to become a bigger part of Apple's story here over the next couple of years?
I think it's going to only increase, and I say that because if you look at the watch, you have applications like the ECG app to take an electrocardiogram, or emergency calling if someone falls. It looks like they're going to add sleep monitoring, hand washing checks. And so these are helping people to lead healthier lives. And in fact, in some cases, as we all know, it's helped to save lives.
Go wash my face real quick.
I think that Apple's move into the healthcare space is interesting. I think it's very, very early innings. And it's going to combine some of the elements that we've seen them do in other areas, which is to partner, to work with others. Apple cannot do it all on its own. But their platform, I think, will serve them well over that time period.
And Dan, just sort of to follow up on that, everyone was waiting for Tim Cook to invent the next world-beating product, right? And what he did instead, perhaps, is invent a world-beating portfolio of services, which is decidedly less sexy than what Steve Jobs did, but perhaps as much or maybe even more effective because of the sustainability of creating an ecosystem. Is that fair to say?
I think that's right, and I think certainly Jobs was instrumental in so many things across the company. But if we think about the Tim Cook era and where this company's going, their ecosystem has over 1 million apps. It just continues to grow, and it's global. It's men and women throughout the U.S. In all continents who are developing apps. The ability to empower people to build on top is really what contributes to the vibrancy. And as users, it's the fact that it's fun, it's easy, it's secure. You're able to have you control your data. Your data can move between your products, but you are the one that's in control. Those are important elements which I think help position the company well.
All right, Daniel Flack, Senior Research Analyst at Neuberger Berman. Always great to have you on the show. Thanks so much for giving us your perspective on Apple. We'll see you again soon.
Great.
Wow.
Thanks for having me.
How many shares do you guys own on Apple and Facebook and Amazon, Google?
Here after hours is just around 5%, crossing above $400 a share for the first time. We're going to have more on these results with our tech editor, Dan Halley. We'll be right back.
All right, guys. So Apple, their earnings call starts in 17 minutes. We might hear news on 5G. Amazon earnings will begin very soon as well. Let's see when Amazon starts their earning. Amazon starts their earnings at 2:30, so half an hour after Apple will start their earnings. So we'll listen to Apple, and then the other stream will switch to Amazon. But Amazon earnings will start in 47 minutes. So overall, great news if you guys own any of the big tech stocks: Facebook, Amazon, Apple, Google. Microsoft beat their earnings too, but the stock went down shortly after. Sorry, those who own Microsoft, but you can see it did very well. So let's go ahead and move Amazon over here. If you're watching the Amazon stream, do you guys want to hear Apple's earnings until Amazon starts, or do you guys just want to focus on the Amazon? Vice versa. So anyways, appreciate if you guys are able to. If you guys have like a couple dollars, $1, $2, or $5 to spare. If you guys want, you can send some love for me live streaming all the big tech stocks in the super chat below. You can see the super chat link if you want to just toss in like a couple bucks. I appreciate it. So we're covering all the major tech for you guys to enjoy. Okay, so once that starts. So a lot of people, it still surprised me. A lot of people keep asking, what does a stock split mean? Since there's a lot of people who doesn't know what a stock split is. So let me make sure that looks good. So bigger. So what a stock split is, basically the stock gets splitted up. So if you own one stock, since Apple is doing 4-1 stock, your one stock turns into 4 stocks, and that stock is worth 1/4 of the value. So let's say since Apple stock right now is at $400, those stocks will turn into $100, but you have 4 of them. So that's what stock split is. Now, if a company ever does a reverse stock split, it usually means that company is in huge financial trouble, which means it requires, like, a company that just did this was Aurora Cannabis, just did this, and Chesapeake, where they did a 200-to-1 reverse stock split, where it requires 200 shares to turn into 1 stock. So that's what a reverse one is. Usually you don't ever want to hear reverse stock split. That means the company is in very deep financial trouble. But I appreciate all of you guys who do like the stream, and you guys hit the like button. Thank you guys for doing that. So 15 minutes, we're going to hear Apple of their delivery. If there's going to be any huge groundbreaking news, if Apple is going to announce 5G phones. I highly doubt they'll announce 5G phones. We have Google spending $26 billion in share buybacks. That means Google's stock price is going to go up since there's less share in the market. So Google, they're due $26 billion. I don't know the actual numbers on it, but I could see the stock being $1,700, like reaching Tesla range $1,700. If they do the buybacks, I don't know what's the period of time of the buyback, but we'll see what the period of time buybacks. No, I think Amazon, what they should have done was a buyback too. Amazon should have done no, not a buyback, a stock split. They should have split their stock, in my opinion. If Amazon did a 10-to-1 split, that'd been great. Even a 20-to-1 split would be great. 21 split would be amazing. So Warren Buffett just like turned his shares from millions to billions, maybe. You can never go wrong investing in Amazon, in my opinion. No, good person. It's good news. They're doing a stock split in a good way. A reverse stock split's bad. They're doing a regular stock split. Yeah, I don't think Apple really need to do a stock split. Apple didn't need to do a stock split, but it's good news, you know. I don't mind. I mean, that means more regular people can invest in Apple at $100 instead of $400. Amazon needed to do like a 25-to-1 split, man. Amazon is so expensive, no one can like invest into it. Only a fraction share. Yep. Amazon Q2's out. Hey, thank you so much for liking the video. Did you see that little dog? $10 donation by Godlike Machine. Thank you so much. Hey Nukem, I used to watch your videos years ago, but I fell off the train. Imagine my surprise when I found this randomly. I guess you know that you've grown up and when you watch finance videos. Thank you so much for a $10 donation, Godlike. If you guys don't know, I am a professional video gamer. I have a video game channel of over 1 million subscribers. Right there, you can see Godlike's donation right there. So I have a YouTube channel, a video game YouTube channel of over 1 million subscribers. I started this finance channel April 19th, 2020, because I was just tired of playing video games. Even though I play video games for a living, I want to talk about finance. I want to be smart with my investment. So I made a finance channel, and it's great to see one of my gaming viewers back in the day who watched my gaming YouTube channel decides to grow up like I did and look into finance and building wealth. So thank you for that $10 donation. I appreciate it. No, I don't stream Twitch. I'm exclusive Facebook partner, but I make YouTube videos on video games for a living, over 1 million subscribers, and then I got contacted by Facebook to stream on the platform, so I'm a full-time Facebook streamer as well. But thank you so much, Godlike. So 10 minutes, Apple's earnings gonna happen in 10 minutes. You guys are interested? If you're watching on the Amazon stream, Amazon's earnings starts in 40 minutes. Do you guys want to hear Apple's earnings first or Apple's earnings and then switch to Amazon, or you just want to wait for Amazon? Let me know in chat. That's where I saw you on the game. Oh yeah, you found me through my video game channel? Nice. You had Amazon stock since 2016. You don't plan on selling it. If anything, you should have... Dude, Blank, I hope you kept buying more Amazon shares back in 2016, man. Okay, looks like the Amazon stream doesn't want to hear the Apple earnings and then switch to Amazon when it comes out. Most people would just want to wait for the Amazon earnings. As you can see, it starts at 2:30, so Amazon starts half an hour after Apple. So I guess since you guys don't want to hear the Apple's earning call, I'll just leave it on the Amazon. I am doing an Apple stream at the same time. I'm dual streaming. Believe it or not, I have 2 streams going on. One is an Apple earnings stream and an Amazon earnings stream. So we're going to listen to the Apple one and the Apple stream, and then when the Amazon starts, we'll start the Amazon stream. When the earnings call starts. But I want to let you know, if this is your first time in earnings call for Amazon, Jeff Bezos doesn't go on earnings call. He's the only big tech CEO that doesn't go on earnings call. You have Tim Cook, the CEO of Apple, goes on earnings call. Mark Zuckerberg for Facebook, and then you have Google CEO, and then you also have Elon Musk who goes on the earnings call. Jeff Bezos is so rich, he's like, it's not worth my time to even go into these quarterly calls. I'll just use a proxy. What usually happens after good earnings for FANG stock? Do people sell after good earnings? From my experience, I only been investing in stock market for 2 years. I started in 2018, February 2018, and that was a rough time to enter because you had the trade war with China, you had North Korea shooting rockets all the time, and then you just had that December where the correction, like 10% correction, before we had a big bull run in 2019 and 2020. Based on what I see, usually earnings, the stock does pretty well, unless it's a red day. If it's a like heavy red day, even you have good earnings and your stock was up, on a heavy red day, your stock eventually goes down. There's nothing your stock can't maintain a heavy good news of earnings, no matter what the good news is, if everyone is heavy in the red. So generally, we have the S&P 500 consists of heavy percent in Apple, Microsoft, Google, Facebook. Those are all big players in the S&P 500 and in the Dow and the NASDAQ. So since they all had good earnings, there's a high probability that tomorrow's stock market will be in the green. Now don't quote me on that, unless we get some bad news that the virus somehow starts infecting the whole world even greater scale, and then there's a bad news on the vaccines, and there's a bad news from Trump, then the stock market will go down. No matter how good earnings, the stock will go down. So generally, I expect if everything is just normal the way it is now and nothing changes in 24-hour period, all the stocks should go up, especially the big tech stock, the NASDAQ. Link your Apple stream to this chat. Sure. Here's my Apple stream. You see, if I take this. Can someone post a, let me see if I can grab a link to my Apple stream here. What's this gonna do? Here we go. Apple's earnings call right here. Grab the link, and then I post it in chat. All right, if you're on Google, you want to see Apple's earning, or Apple's earning is in 5 minutes. You know what? I'm just gonna play on both streams. We're gonna play Apple, and then until Amazon starts, and we'll switch it to Amazon. Everyone's gonna get to hear Apple, and then. For the Apple stream, I'm not going to switch to Amazon. For Amazon stream, I'll switch it to Amazon once it starts. So let's go ahead and go to Apple. Earnings call. Okay, there. You can see Apple and Amazon earnings call right there. Okay. Let's see. Let's see where all the stocks are trading at right now. Okay, so let's see. Amazon's up 5%, Facebook's up 7%, Apple's up 6%. Google is up 0.5. So even though Google did very well in their earnings, for some reason the stock is not blowing up like the other stock. I don't know why. Do you get more dividends because of stock split? Do you get more dividends because of a stock split? Let's see. Hey, thank you for subscribing, John. Let me see. Do you get more dividends of a stock split? That means you own more share of stock, and usually a company pays a dividend based on your stock, right? You get a percentage of dividend on how many stock you own in a company. I would assume you get more dividends since they do a stock split and you own more stocks, right? That would make sense to me. They pay you on how much stock you own on your dividends, so makes sense. Yug, I'm gonna time you out, bro. There's no news on Neo, kid. If there was a Neo's earning, I would have made one, dude. Please do research before asking silly questions.
Chill by Sakura HC.
No, you don't earn more dividends because you own more shares, so it doesn't work that way? I thought they usually pay dividend by per share, right? Oh, dividend is based on value, so how much value you have? Okay, so that makes sense. So we got Apple's earnings in 2 minutes. Let's check in if they started yet. Nope, still music.
Help You Out. Feat Jonathan Robbins by Lionel Casio.
Wait, does dividend get split too in a stock split? Maybe the dividends get split as well. Okay, yeah. So I guess you get your dividends doesn't change since you own the same amount of stock, but the dividend gets a decrease because there's more stocks available or shares. Okay, so your dividend doesn't change at all. So the dividend doesn't change at all since the dividend gets split along with the stock. Okay, I get it. Hey, thank you for subscribing. Appreciate it. Do you have any Apple stock? Yes, I do. I can show you my portfolio. Make sure I don't show you guys my numbers. Let me see how I did in the stock market today. Let me see. Since a lot of you guys are curious of my portfolio. Alright, since a lot of you guys are asking my portfolio, I can show you my portfolio for a second. So you can see my net worth's at almost at $750,000. I have $144,000 in cash, $336,000 in investments. My housing assets, I own $1 million worth of houses, but my mortgage is $749,000. So that's my assets. I can show you what my Apple balance is. Oh look, my portfolio only was down 0.03%. Let's see this earnings. I'm still playing music. My portfolio, I am only down 0.03% on a red day versus the S&P 500 38%. Check on my investments. As you can see, my biggest portfolio is Tesla. I have 8% on Tesla and 5.4% in Apple. So I own a couple hundred Apple. I don't know. All right, let's see the earnings. No, they're still playing music. Do I invest in crypto? No. I don't invest in too crazy a speculative market. Let's see. So I own 17 shares of Apple there, plus another 29. So let's say 30 plus 39. So I own 47 shares of Apple. Yeah, you're up 40% year to date. I am up not 10% year to date. So today, yeah, so far year to date, I'm up 10%. Let's hear this. Oh, still music playing. Who knows? Maybe Amazon Amazon earnings might start first. Hey guys, I appreciate you guys being here. Thank you so much for liking the stream and subscribing. You're brand new. Thank you for being here. If you guys have like $1 to $2 spare, maybe $5 spare, and you can don't want to show some support for showing you guys all the big techs earnings today, Apple, Google, Facebook, Amazon. I appreciate the super chat donations if you guys are able to. If not, I just appreciate a like and a subscribe. You're awesome.
Good day, everyone. Welcome to the Apple Incorporated third quarter fiscal year 2020 earnings conference call. Today's call is being recorded. At this time, for opening remarks and introductions, I would like to turn things over to Mr. Tejas Gala, Senior Manager, Corporate Finance and Investor Relations. Please go ahead, sir.
Thank you. Good afternoon, and thank you for joining us. Speaking first today is Apple CEO Tim Cook, and he'll be followed by CFO Luca Maestri. After that, we'll open the call to questions from analysts. Please note that some of the information you'll hear during our discussion today will consist of forward-looking statements, including, without limitation, those regarding revenue, gross margin, operating expenses, other income and expense, taxes, capital allocation, and future business outlook, including the potential impact of COVID-19 on the company's business and results of operations. Actual results or trends could differ materially from our forecast. For more information, please refer to the risk factors discussed in Apple's most recently filed periodic reports, Form 10-K and Form 10-Q, and the Form 8-K filed with the SEC today, along with the associated press release. Apple assumes no obligation to update any forward-looking statements or information which speak as of their respective dates. I'd now like to turn the call over to Tim for introductory remarks.
Thanks, Tejas. Good afternoon, everyone. Thanks for joining the call today. Before we begin, I join the many millions across this country in mourning and memorializing Congressman John Lewis, who was laid to rest earlier today. We've lost a hero who walked among us, a leader in the truest sense, who urged this country to aim higher and be better until the very end. I was humbled and fortunate to know him, and as an Alabama native, his example inspires me still. It now falls to every American to be a living memorial to John Lewis and to carry forward the work and the mission that defined his life. Throughout the call, I'll speak in greater detail about Apple's support for equity and justice, topics of great urgency on a number of fronts. But first, I want to pull the lens back to consider the quarter in full. In an uncertain environment, Apple saw a quarter of historic results, demonstrating the important role our products play in our customers' lives. We set a June quarter record with revenue of $59.7 billion, up 11% from a year ago. Both products and services set June quarter records and grew double digits, and revenue grew in each of our geographic segments, reflecting the broad base of this success. As always, and especially in times of real adversity, what makes us proud as a company is not merely what we did, but how we did it. As millions march for justice in big cities and small towns alike, we committed $100 million to launch Apple's Racial Equity and Justice Initiative, as well as new and renewed internal efforts to foster diversity and inclusion at all levels of the company. As COVID-19 continues to represent great risk for individuals and great uncertainty for our communities, care and adaptability are defining how we conduct our work wherever we work. In some places, that has meant responsibly reopening our operations and retail stores with enhanced health and safety precautions. In others, where the virus has reemerged, it's meant taking the challenging but necessary step of reclosing stores. I'll touch on these topics more in a little bit, but first I want to offer some more context on the quarter's results. Due to the uncertain and ongoing impacts of COVID-19, we did not provide our typical guidance when we reported our results last quarter, but we did provide some color on how we expected the June quarter to play out. I'd like to contextualize our results in terms of that color across each of our product categories, beginning with iPhone. iPhone revenue grew 2% this quarter. In April, we expected year-over-year performance to worsen, but we saw better than expected demand in May and June. We attribute this increase in demand to several interactive causes, including a strong iPhone SE launch, continued economic stimulus, and potentially some benefit from shelter-in-place restrictions lifting around the world. We expected iPad and Mac growth to accelerate, and we saw very strong double-digit growth for these devices this quarter. This remarkable performance came in spite of supply constraints on both products. We're working hard to get more iPads and Macs into customers' hands as quickly as possible, recognizing how integral they have become to working and learning from home, providing entertainment, and staying connected with loved ones. Wearables growth decelerated as we expected, but still grew by strong double digits and set a revenue record for a non-holiday quarter. Building on powerful new features built into watchOS 7 and AirPods Pro announced this quarter, we are very excited about the many opportunities in front of us for this product category. These strong results, all-time revenue records in the App Store, Apple Music, video, and cloud services, as well as elevated engagement on iMessage, Siri, and FaceTime. Customers are loving new offerings across Apple services like Apple News Today, our new daily audio briefing, and Greyhound, our new summer blockbuster starring Tom Hanks. In fact, Apple TV Plus just hit a history-making 95 awards nominations and 25 wins and accolades. Based on these results and our performance over the last 4 quarters, we are proud to announce that we have achieved our goal of doubling our fiscal 2016 services revenue 6 months ahead of schedule. We're conscious of the fact that these results stand in stark relief during a time of real economic adversity for businesses large and small, and certainly for families. We do not have a zero-sum approach to prosperity, and especially in times like this, we're focused on growing the pie, making sure our success isn't just our success, and that everything we make, build, or do is geared toward creating opportunities for others. The App Store is a great example. This quarter, a new study by independent economists at the Analysts group found that the App Store facilitated more than $500 billion in commerce globally in 2019 alone. Especially in a time of COVID-19, you can measure economic resilience in the ways in which the App Store supports remote ordering for restaurants, digital commerce for small businesses, and an enduring entrepreneurial opportunity for creators and visionaries. Keeping learning vibrant and impactful in the time of COVID-19 is a priority everyone shares. Earlier this month, we announced significant enhancements to the Develop in Swift and Everyone Can Code curricula, and we launched a new professional learning course available exclusively to educators. And just 2 weeks ago, our Community Education Initiative added 10 more historically Black college and university regional coding centers to our roster, bringing the total to 24 locations nationwide, 12 of which are HBCUs, and 21 of which serve majority Black and brown student populations. In Apple's backyard, we announced that we're allocating $400 million of our multi-year $2.5 billion affordable housing commitment to new housing construction, homebuyer assistance programs, and support for those at greatest risk of experiencing homelessness across Silicon Valley. Apple's results this quarter are only possible due to our people and their ongoing ingenuity, flexibility, resilience, and determination during these ever-changing times. I want to thank our Apple Care and retail teams who have paired exceptional service during a time of intense demand with great adaptability during a quarter where stores have reopened in some places and reclosed in others. A dedicated team of specialists and experts has shouldered the task of caring for the well-being of our teams and communities, store by store, location by location, with evidence-driven granularity and agility that is unrivaled anywhere. Innovation from adversity certainly defined this year's Worldwide Developers Conference as well. This is an event where traditionally Apple's worldwide community of developers gathers together to share, celebrate, and do big things together. Though we could not be together in person, Apple set a new standard for what online events can achieve with our celebrated all-virtual event. The results here speak for themselves. More than 22 million viewers tuned in across all of Apple's streams. For our developers, we distributed more than 72 hours of video content. That's 3 full days of video. The week saw more than 200 direct-to-video engineering and design sessions and about 4,500 person-to-person appointments with developers across 227 virtual labs. And of course, that's even before you get to this year's announcements. From iOS 14, which boasts a radical redesign to the home screen, powerful updates to messages, streamlined and effortless app clips, and even greater privacy, transparency, and controls, to major updates to Apple Pencil, Siri, and calling and iPad OS 14, to much anticipated sleep tracking, new fitness and wellness features, and unprecedented customization in watchOS 7, to the new macOS Big Sur boasting the biggest redesign upgrade to macOS since OS 10. No less important for Apple's innovation roadmap is our transition to Apple Silicon for the Mac. This 2-year effort will achieve both unprecedented performance for the Mac and a common architecture across all Apple products. Looking forward, we are profoundly optimistic about Apple's future, and we recognize that with this success comes a real responsibility to lead with our values, because those values help make that success possible in the first place. We are just as proud of our announcement this month that Apple will be fully carbon neutral by 2030 across our entire supply chain, and including the energy use of every device we make, as we are of any hardware innovation, because they spring from the same instinct to leave the world better than we found it. We're committed to standing with those marching for their lives and dignity through our new $100 million commitment to Apple's Racial Equity and Justice Initiative. And we're deepening our diversity and inclusion efforts internally, because our future as a business is inextricably linked with the future of our communities. There are times when things seem to move slowly, when needed progress, economic or social, seems bogged down, when the instinct to turn away from the horizon and hold on to what you've got feels inescapable. And then there are times like this, when people of goodwill step forward, when progress unmoors itself, when the insistence of hope forces something new. This is an immensely challenging moment. COVID-19 is still devastating many places, and we have work left to do to care for the health and well-being of the communities in which all of us live and work. But no community of people, whether a company or a country, can afford to miss this call when it comes. At Apple, we never have, and we don't intend to start now. With that, I'll hand things off to Luca.
Thank you, Tim. Good afternoon, everyone. Our June quarter was a testament to Apple's ability to innovate and execute during challenging times. Our results speak to the resilience of our business and the relevance of our products and services in our customers' lives. Total revenue was $59.7 billion, a new June quarter record, up 11% from a year ago, despite a 300 basis point headwind from foreign exchange. Our performance was strong across our entire portfolio as we grew revenue in each of our product categories and set June quarter records for Mac, for wearables, and for services. Similarly, our results were very strong all around the world, with growth in all geographic segments and new June quarter records in the Americas, in Europe, in Japan, and rest of Asia Pacific. Products revenue was $46.5 billion, up 10%, and a June quarter record. iPhone returned to growth, and we saw very strong double-digit growth from iPad, Mac, and wearables. Lockdowns and point-of-sale closures were widespread during April and impacted our performance, but we saw demand for all products improve significantly in May and June. As a result of our strong performance and the unmatched loyalty of our customers, our installed base of active devices reached an all-time high in all of our geographic segments and all major product categories. Our services continue to grow strongly, up 15% year over year, and reached a June quarter record of $13.2 billion. We set all-time records in many services categories and June quarter records in each geographic segment. I'll cover this in more detail later. Company gross margin was 38%. This was down 40 basis points sequentially due to unfavorable FX of 90 basis points and a different mix of products, partially offset by cost savings and services mix. Products gross margin was 29.7%, decreasing 60 basis points sequentially due to FX and a different mix, partially offset by cost savings. Services gross margin was 67.2%, up 180 basis points sequentially, mainly due to mix. Net income was $11.3 billion, and earnings per share were $2.58, up 18%, and a June quarter record. Operating cash flow was also a June quarter record at $16.3 billion, an improvement of $4.6 billion over a year ago. Let me get into more detail for each of our revenue categories. iPhone revenue grew 2% to $26.4 billion, with customer demand improving as the quarter progressed. COVID-19 was most impactful during the first 3 weeks of April, when lockdowns and point-of-sale closures became more widespread in many countries. We saw marked improvement around the world in May and June, which we attribute to an improved level of customer demand, helped by the very successful launch of iPhone SE and economic stimulus packages. Our active installed base of iPhones again reached an all-time high as a result of the loyalty of our customer base and strength of our ecosystem. In fact, in the US, the latest survey of consumers from 451 Research indicates iPhone customer satisfaction of 98% for iPhone 11, 11 Pro, and 11 Pro Max combined. Turning to services, as I said, we set a June quarter record of $13.4 billion of revenue. We had all-time record performance and strong double-digit growth in the App Store, Apple Music, video, and cloud services. Our new services, Apple TV Plus, Apple Arcade, Apple News Plus, and Apple Card, are also contributing to overall services growth and continue to add users, content, and features. At the same time, customer engagement in our ecosystem continues to grow at a fast pace. The number of both transacting and paid accounts on our digital content stores reached a new all-time high during the June quarter, with paid accounts increasing double digits in each of our geographic segments. In aggregate, paid subscriptions grew more than 35 million sequentially, and we now have over 550 million paid subscriptions across the services on our platform, up 130 million from a year ago. With this momentum, we remain confident to reach our increased target of 600 million paid subscriptions before the end of calendar 2020. Wearables, home, and accessories established a new June quarter record with revenue of $6.5 billion, up 17% year over year. Our wearables business is now the size of a Fortune 140 company, and we set June quarter records in the majority of markets we track. Importantly, Apple Watch continues to extend its reach, with over 75% of the customers purchasing Apple Watch during the quarter new to the product. Next, I'd like to talk about the impressive performance of Mac. Revenue was $7.1 billion, up 22% over last year, and a June quarter record. We grew double digits in each geographic segment and set all-time revenue records in Japan and rest of Asia Pacific, as well as June quarter records in the Americas and Europe. Customer response to our new MacBook Air and MacBook Pro launches has been extremely strong. iPad performance was equally impressive, with revenue of $6.6 billion, up 31%, and our highest June quarter revenue in 8 years. Demand was strong around the world, with double-digit growth in each of our geographic segments, including a June quarter record in Greater China. The launch of our new iPad Pro has been received incredibly well in every region of the world. Both Mac and iPad are extremely relevant products in the new working and learning environments, and the most recent surveys of consumers from 451 Research measured customer satisfaction at 96% for Mac and 97% for iPad. Around half of the customers purchasing Mac and iPad during the quarter were new to that product, and as a result, the active install base for both products reached a new all-time high. Our retail business had record June quarter revenue thanks to the performance of our online store. We set records in all geographic segments and grew across all major product categories. In June, we launched Apple Card monthly installments for more products in our US stores, allowing customers to pay for their devices over time with 0% interest. We're very pleased with the level of customer interest this new offering has generated. In the enterprise market, we continue to see companies leverage Apple products and offerings to successfully navigate their businesses through COVID-19. In healthcare, we're seeing rapid acceleration of telehealth to support a more flexible model of patient care. Many hospitals, such as UVA Health, Rush University Medical Center, and UC San Diego Health, are using apps on iPad and iPhone to help triage, monitor, and care for patients who are at home. This helps free up hospital capacity to support patients who need inpatient care while enabling continued care for patients who do not require in-person visits. Since many call center employees are currently working remotely, Apple Business Chat has proven an invaluable tool for staying connected with customers. This quarter, HSBC deployed Apple Business Chat in its US and UK contact centers. Apple Business Chat provides a flexible and secure channel for digital banking assistance through a native Apple experience, improving the efficiency and experience for both customers and agents. We are seeing similar adoption by hundreds of other organizations. Let me now turn to our cash position. We ended the quarter with almost $194 billion in cash plus marketable securities. We issued $8.5 billion of new term debt, retired $7.4 billion of term debt, and increased short-term borrowing facilities by $1.1 billion during the quarter, leaving us with total debt of $113 billion. As a result, net cash was $81 billion at the end of the quarter, and we continue on our path to reaching a net cash neutral position over time. We returned over $21 billion to shareholders during the June quarter, including $3.7 billion in dividends and equivalents, and $10 billion through open market repurchases of 31.3 million Apple shares. We also began a $6 billion accelerated share repurchase program in May, resulting in the initial delivery and retirement of 15.2 million shares. And finally, we retired an additional 4.8 million shares in the final settlement of our 15th ASR. As we move ahead into the September quarter, I'd like to provide some color on what we are seeing, which includes the types of forward-looking information that Tejas referred to at the beginning of the call. Similar to last quarter, given the uncertainty around the world in the near term, we will not be issuing revenue and margin guidance for the coming quarter. However, we will provide some additional insight on our expectations for the September quarter for our product categories. On iPhone, we expect to see recent performance continue for our current product lineup, including the strong customer response for iPhone SE. In addition, as you know, last year we started selling new iPhones in late September. This year, we project supply to be available a few weeks later. We expect the rest of our products categories to have strong year-over-year performance. For services, we expect the September quarter to have the same trends that we observed during the June quarter, except for Apple Care, where during the September quarter a year ago, we expanded our distribution significantly. As a consequence, we expect a difficult comp for Apple Care, also considering the COVID-related point of sale closures this year. For gross margin, keep in mind that we will have a different mix than in prior years, as I just explained. For OPEX, we expect to be between 9.8 and 9.9 billion. We expect the tax rate to be about 16.5% and OI&E to be 50 million. Also today, our board of directors has declared a cash dividend of 82 cents per share of common stock, payable on August 13, 2020, to shareholders of record as of August 10, 2020. And finally, today we're announcing a 4-for-1 split of Apple common stock to make our stock more accessible to a broader base of investors. Each shareholder of record at the close of business on August 24, 2020, we received 3 additional shares for every outstanding share held on the record date, and trading will begin on a split-adjusted basis on August 31st, 2020. With that, let's open the call to questions.
Thank you, Luca.
There you go. You heard the date of the
limit
split.
Yourself to 2 questions. Operator, may we please have the first question?
Yes, that will be from Katie Huberty with Morgan Stanley.
Thank you. Good afternoon. Tim, in light of the economic adversity that you talked about in the prepared remarks, can you just walk us through how Apple's leveraging finance and trade-in programs to make technology more affordable and accessible during this period, while also, addressing the opportunity to recycle and reuse products, and maybe also extend that to how these programs might expand over time? And then I have a follow-up.
Yeah, as Luca mentioned, in June we actually rolled out to the overwhelming balance of our other products the ability to do interest-free financing in our stores with payments, and that's in addition to trade-in, which is becoming a more common trend now, which I think is terrific because it is great for the environment. And it acts as a subsidy, if you will, against the price of the new phone. And so when you compound these 2 things with the financing and the trade-in, it makes the product super affordable. And we're really happy with what we're seeing in that regard.
And then as a follow-up, just specifically to iPhone, the category returned to growth. As you pointed out, the installed base is larger today. Our math would suggest that replacement cycles in some cases are elongated. And then you have the affordability element that you just discussed. Does all of that combine to build confidence that we're entering a longer period of iPhone revenue growth after what's been 6 quarters of decline?
We're very pleased with how we did on iPhone. It was better than we thought, largely because, as we pointed out in the prepared remarks, May and June were much better. If you look at iPhone in totality, the things that get me very optimistic is the size of the active install base. The fact that if you look in the major geographies like the US, we had the top 2 selling smartphones. In the UK, we had 3 of the top 4. In Australia, we had 5 of the top 6. In Japan, we had the top 4. Urban China, we were iPhone 11 was the top selling smartphone in the country. And so these are, some very different geographies with their very different competitive situations, and we're doing fairly well. The iPhone SE, it's also clear that from the early data, we're seeing a higher switcher number than we did in the previous year, which we feel very good about. And it also seemed to appeal to some people that were holding onto the device a little longer because they wanted a smaller form factor phone. And so the combination of the smaller form factor and an incredibly affordable price made the iPhone SE very popular. iPhone 11 is still the most popular smartphone, but iPhone SE definitely helped our results. And as Lucas said in his outlook, we do see that continuing into this quarter currently.
Thank you, Katie.
Thank you. Congrats on the quarter.
Thank you so much.
Can we have the next question, please?
Yes, that will be from Krish Sankar with Cowen and Company.
Yeah, hi, thanks for taking my question. I have 2 of them. First one, Tim, when you look at the services business and in terms of your TV plus content production, have the movement restrictions impacted the content production efforts? And along the same path, 4 years ago, your premonition on services being a $50 billion business in 2020 came sooner than expected. I don't know if you want to make any such forecast 4 years out on how you think services revenue is going to be. Then I had a follow-up for Luca.
I'm sorry, I missed that second question because the audio didn't come through, but I think I got the gist of the first, and that is production has been affected for Apple TV Plus, as I think it has for most people. We are working to get restarted. I don't have a precise date yet when we will get restarted, but there will be some impact because we shut down in the March timeframe and are yet to really restart in a significant way, particularly for those that are shot in the LA area, given the current status of the virus in those. And I'm sorry I missed the second part of your question.
Well, Tim, I was trying to see, 4 years ago, you made a great prediction that services is going to be $50 billion by 2020. I wanted to see if you have any update to the prediction 4 years down the road.
We're not updating today. We feel good. We want to take the moment and feel good about achieving the doubling 6 months early. And we do have still hanging out there, as you know, the subscription number that we're shooting for later in the year at 600 million. So we do have that objective out there.
If I could just squeeze in one for Luca. With the strong sales in Mac, given the shelter in place, do you think the back-to-school season got pulled in by a quarter, or do you expect the momentum to still continue? Thank you very much.
As I said when I was talking about providing some commentary for the September quarter, we expect all the non-iPhone product categories to have a very strong year-over-year performance. So we definitely, the back-to-school season is clearly this one, and we're very excited not only for the Mac but also for the iPad. We got a fantastic lineup of products. And we know that these products are incredibly relevant, especially given the current circumstances. So we expect the performance that we've seen for Mac in the June quarter to continue.
Thank you. Can we have the next question, please?
Yes, from Cross Research, we'll hear from Shannon Cross.
Thank you very much. Tim, can you talk a bit about what you're seeing in China? I know the revenue was up 2%, and I think Luca talked about record iPad, but just curious as to, given their 5G is a bit ahead, how you're seeing the market play out. And then I have a follow-up. Thank you.
Yeah, Shannon, the growth that we did see growth in Greater China for the quarter of 2%. Currency affected China a bit more than in other places. It affected 400 basis points, and so in constant currency, we would have grown at 6. As I had mentioned before, the iPhone 11 has been our best-selling phone and has been number one in urban China, and so we're very, very proud of that. iPad was helped in the June quarter there by the work from home and distance learning as it was in other geographies, and the Mac also grew strong double digit during the quarter, and services set a new June quarter record there. We also continue to see extremely high new customer rates on Mac and iPad there. To give you a perspective, about 3 out of 4 customers that are buying the Mac are new in China, and about 2 out of 3 that are buying the iPad are new. And so these are numbers that we're super proud of.
Great. And then can you talk a little bit more about the decision to bring Mac Silicon in-house and, the benefits that you expect to see or you've seen from vertical integration of acquisitions like the Intel modem business? Thanks.
Yeah, I mean, what we'll wind up with is a common architecture across all of our products, which gives us some interesting things that we can do in products that are that it sort of unleashes another round of innovation. And so I don't want to say a lot about it other than we're extremely excited about it. It's something that we've worked on quite a while to get to this point, and we're looking forward to shipping the first Mac with Apple Silicon later in the year.
Thank you, Shannon. Can we have the next question, please?
That will come from Amit Daryanani with Evercore.
Yep. Thanks for taking my question, guys. I have one and a follow-up as well. So first one, I guess, Tim, if I think about the strength you're seeing with iPhones right now, do you have a sense in terms of, where is this trend coming from? Is it more replacement cycles getting shorter, or we're just getting new customers into the iOS ecosystem? Because clearly these growth rates seem fairly impressive in the context of a pandemic and the upcoming refresh cycle that we have.
I think, Amit, it's a combination of a strong launch with iPhone SE and some probably some pickup because of the economic stimulus that hit different countries at different points in time, and probably some of the reopening that took place across the quarter, particularly in May and June as stores started to reopen. And so it's a combination of all of those. And as you know, we've been having a strong cycle with the iPhone 11 and the 11 Pro. And so when you combine a strong cycle plus an iPhone SE launch, plus the reopening of the stores, et cetera, I think there were a lot of things that were going in the right direction there.
Perfect. That's helpful. And I guess, Luca, if I could just follow up with you, I'd love to get your perspective on how do we think about the overall 38% gross margins. What do you think are the levers to improve this as you go forward, not really September quarter, but over the next 1 or 2 years? And in that context, do you see a point where the product gross margins start to stabilize, because they have been trending somewhat lower for the last couple of quarters now?
Yeah, well, let me start with what we've seen during the June quarter. We were, at 38%. We were down slightly sequentially, but up the same amount on a year-over-year basis. And really, the big negative impact that we felt for several quarters now has been the strength of the U.S. dollar. So the foreign exchange impact on a sequential basis was 90 basis points. On a year-over-year basis was 130 basis points. So obviously, that is something to keep in mind. And then the other aspect I think it's always important to keep in mind, Amit, is that we sell many different products. They have different margin profiles. And so sometimes a different mix can have an impact on the aggregate level of products gross margins, and we're very pleased to see the performance of Mac, iPad, and wearables. But obviously, it's a different mix. Going forward, the variables are always the same. It's the foreign exchange will continue to play an impact. The mix of products that we're going to be selling will have an impact as well. The commodities market has been relatively benign, and we'll see how that plays out over time. As you know, now for several years, we've been managing gross margin, I would say fairly well, in spite of some difficult situations like the one with the strength of the dollar, and we plan to continue to make good trade-off decisions between revenue and units and margins.
Thank you, Amit. Can we have the next question, please?
That will come from Kyle McNeely with Jefferies.
Hi, thanks a lot for the question. Our team in Asia recently, we did some survey work on smartphones in China. It showed that there's still a high proportion of the install base that's on 6, 7, and 8 devices. I know you talked about the trade-in programs and promotions that you've been doing there. I wonder if you can tell us whether there's anything else that you're doing to get these customers into your latest technology. What might those customers be looking for, and how should we think about when an upgrade cycle might come on more strongly there in China? Thanks.
Customers upgrade at a different pace, and I don't have in front of me the exact install base data from China. But I mean, much like in other geographies, the upgrades have extended some. It extended some during the depths, if you will, of the pandemic in China and the rest of the world, and probably to some degree is happening still at this point. The key things that we can do is keep innovating, deliver a product that people can't imagine going through life without, and obviously keep rolling out these programs that make the front end purchase be much less. And this is things like the financing and the trade-in programs that you mentioned. And I do feel like those are going quite good in a number of geographies.
Okay, great, thanks. And one more, if I may. Congrats again on the strong iPad and Mac results. That's really impressive. I guess the obvious question is, should we ever think about how much of that might be pulled forward and what might it do to future upgrades in the next 2 years? Anything else you can share on how you think about growth from here, or whether there's a hangover period, maybe after the back to school season or holiday season? That would be helpful. Thanks.
The install base is growing, and the new customer numbers that Luca went over in the aggregate are still very high. In the close to the 50% kind of range, and so that to me makes bodes well for the future. There's clearly, as we'd indicated, there's some amount of work from home and remote learning that do affect the results of Mac and iPad positively. They probably affect wearables and iPhone the other direction. And but on Mac and iPad, these are productivity tools that people are using to stay engaged with their work or stay engaged with their schoolwork. And we believe we're going to have a strong back to school season. Sitting here today, it certainly looks like that.
Thank you, Kyle.
Okay, great. Thanks very much.
Can we have the next question, please?
That will come from Cleveland Research's Ben Bolin.
Good evening, everyone. Thanks for taking the question. Tim, I was hoping you could share a little bit about where you think channel inventory is. You talked about the tightness you saw exiting the June quarter for Mac and iPad. Interested where you think inventory is across the major product categories. And then I had a follow-up for Luca.
We usually we've gotten away from talking about channel inventories, but to give you a perspective, sitting here looking at it, on iPhone, the inventory is slightly less than it was a year ago, and that's I'm saying that at a quarter end point, so at the end of Q3. And obviously, iPad and Mac are constrained, and so both of those are less than they were in the year ago quarter.
Okay. And then Luca, I'm interested, any color you could share about the impact COVID had on OpEx in the quarter, be it, work from home, stipends, less travel, other employee support costs, and also how the company is thinking about the longer term opportunity of employees working remotely, maybe more permanently, and any considerations on how that could influence future OpEx. Thanks.
Well, on the OpEx front, there have been obviously certain things that have been affected in terms of cost reductions. Obviously, travel is a perfect example. The number of meetings that we have internally, some of those costs have been reduced. We've also invested heavily in initiatives. For example, we're really trying to help during a very difficult circumstances. For example, we have had a program, for example, where we match our employee donations. We made donations directly as a company around the world to many institutions and governments. On a net basis, I would say probably the costs have outweighed the savings, both during the March and the June quarter. But we think it's absolutely the right thing to do. From an employee perspective, what we said so far is that here in the United States, the majority of our population will continue to work from home until the end of the year. And then we'll see. I mean, we've taken an approach that, we try to understand how the virus is evolving over time. We've taken a very cautious approach, both with our corporate facilities and with our retail stores. I think what you've seen with retail stores is that we have reopened in a number of geographies around the world. We've reopened here in the United States. We've had to reclose some of the stores here in the United States as the number of cases has gone up. And we will continue to track how the virus is doing. And hopefully at some point, we're going to get to a point where there is a vaccine or there is a cure. And so we'll make those decisions as we get more information.
Thank you. Can we have the next question, please?
That will be from Jeriel Ong with Deutsche Bank.
Hi, yes, thank you so much. I have two questions as well. I'd like to focus on the gross margin expansion within the services line, all-time record for the quarter. I'm just curious whether you think that will sustain. I understand within services there's a pretty wide range of gross margins by business, and I'm wondering if that should continue to improve.
Well, as you've seen, obviously we've had a sequential expansion in gross margin for services, and that was driven primarily by mix, as you said, right? We have a very broad portfolio, and depending on which one of the services does better, then we have an impact on services gross margins. We like the services business because it is, it's a recurring type of revenue, and the margins are accretive to company margin. We did over 67% this quarter, but we want to offer very competitive services across the board, and the same. I think I'm going to make the same comments that I made on products. What matters to us is to be successful with everything that we do, and provide great products and services to our customers. So, the relative success of our products and services in the marketplace will drive to a certain extent what our margins are. That's, the margins are a byproduct of our success in the marketplace.
Got it. I really appreciate that. And I want to ask a question on the wearable segment. It seems to me that you're categorizing the wearables business as maybe being a little bit impacted from the pandemic, similar to the iPhones. And it's the first time that wearables hasn't materially upsided in at least a while in recent memory. I guess the drivers of wearables being watch and predominantly watch and AirPods. Well, what are your thoughts going forward on whether there's a little bit of pent-up demand, perhaps, that might resume as we get back to a more normalized environment?
I think on the watch in particular is like the iPhone, more affected by store closures, because some people want to try on the watch and see what it looks like, look at different band choices and those sorts of things. And so I think as stores closed, it puts more pressure on that. We did come out sort of the way we told you last quarter we were going to come out from the color that we gave you. So we knew things would decelerate because of the closures. So we wound up being very pleased with how we did. But the store closures definitely affect the wearables and the iPhone.
Thank you, Jeriel.
Got it. Really appreciate that.
Yep.
Can we have the next question, please?
That will come from Jim Suva with Citigroup.
Thank you very much. And I have two questions. I'll ask them at the same time, and it's one for Tim and one for Luca. Tim, the coronavirus, your company has done a fantastic job at overcoming all the hurdles, so congratulations to you. As you look forward, say, to the Christmas holiday shopping season, and given the economic challenges around the world as well as coronavirus and your product launches and things like that, can you give any commentary maybe how this Christmas you're looking forward to, say, maybe some past cycles of Christmas of the lineup? Because it just seems like it's a little bit different, but Apple is really showing a lot more strength coming into this Christmas than maybe some of the past years. And then for Luca, I think you made a quick comment, Luca, that you mentioned something about a few weeks later. Was that for like iPhone chips or product launches, or maybe expound upon that? I know things are more difficult, but I didn't quite catch the commentary. It was in your prepared comments, Luca, about a few weeks late. That's just a quick little blurb. Thank you so much, gentlemen.
Yeah, we take it one quarter at a time, and so we'll give you a color on the December quarter in October. Generally speaking, I think we need to see a vaccine or therapeutic or both, and there's some optimism around that, and in that particular time frame. And so we'll see. I don't have any information that isn't publicly available there, but I think that would boost consumer confidence quite a bit if it began to happen. And I think that any kind of consumer style company would benefit from that.
And Jim, on the iPhone, I said in my remarks that a year ago we launched the new iPhone in late September. So I was referring to the new product, and I said that this year the supply of the new product will be a few weeks later than that.
Congratulations to you and your entire organization and teams. Thank you so much.
Thanks so much.
Thank you. Can we have the next question, please?
That will come from Wamzy Mohan with Bank of America.
Yes, thank you. I was wondering if you can maybe comment on the penetration of Apple Card users in the iOS install base, and have you seen any change in the buying behavior of Apple Card users in terms of accelerating spend on more Apple products and services? And I have a follow-up.
We saw changes in consumer spending as the shutdowns occurred and as store closures occurred. We could see that across the card. It affected the categories that you would guess the most, like travel and entertainment, et cetera. But overall, if you sort of pull the lens out on the Apple Card, we're very happy with the number of people that have an Apple Card. We believe, based on what we've heard, that it's the fastest rollout in the history of credit cards, and so we feel very good about that.
Okay, thanks, Tim. And as a follow-up, now that Apple has Apple Silicon for Macs, would you ever consider monetizing this as a merchant silicon vendor, or is this going to be forever for Apple use?
Well, I don't want to make a forever comment, but we're a product company, and we love making the whole thing, and because we can own the user experience in that way, and with the goal of delighting the user, and that's the reason that we're doing the Apple Silicon, is because we can envision some products that we can achieve with Apple Silicon that we couldn't achieve otherwise. And so that's how we look at it.
Thanks, Tim.
Thank you, Wamzy. A replay of today's call will be available for 2 weeks on Apple Podcasts as a webcast on apple.com/investor and via telephone. The numbers for the telephone replay are 888-203-1112 or 719-457-0820. Please enter confirmation code 2630782. These replays will be available by approximately 5 p.m. Pacific Time today. Members of the press with additional questions can contact Kristin Hugett at 408-974-2414. Financial analysts can contact me with additional questions at 669-227-2402. Thank you again for joining us.
And again, that will conclude today's conference.
The same as people have been Prime members for a number of years, but it's encouraging. And as you saw, Prime growth retention has increased. We've accelerated the growth of Prime members both in the U.S. and internationally. So that's a good sign that we're happy about, and we hope that has long-term ramifications.
Our next question comes from Ross Sandler with Barclays. Please proceed with your question.
Yeah, just to follow up to that last comment. So
the Prime behavior for international Prime members. You guys have talked about how, like, in the 16, 17 countries, the overall service levels are a little bit behind, selections a little bit behind. So has the last few months in the pandemic closed that gap meaningfully in terms of, GMV per Prime member for international versus what you see in the U.S.? Any comment there? And then on the 3Q guidance, you've pushed Prime Day for Western markets into 4Q. So how much of the deceleration, it's obviously a really strong number for 3Q, but the growth rate's decelerating a little bit. Is that mostly from Prime Day, or can you just talk about what kind of behaviors you're seeing right now as you go into 3Q? Thank you.
Right. Well, we ramped up through the quarter in Q2 and ended up with 41% year-over-year growth in on an FX neutral basis. A lot of those trends are continuing into Q3. You see our revenue range is $87 billion to $93 billion, coming off a $89 billion quarter. So I would say that if you look at the growth rate, that translates into somewhere in the 24 to 33% growth rate in Q3. So I can't break out exactly the Prime impact because there's, but suffice to say, it's a big driver on why 41% growth in Q2 turns into 24 to 33% growth in Q3 on what turns out to be higher revenue volume. And then on Prime behavior, it's I can't really give you more on that because it is actually a very localized set of stats by country. An international aggregate does not matter that much. And what I would say is generally what we're seeing is similar trends in international in response to COVID purchasing patterns. I wouldn't say it closed the gap. I would say they both went up, and we'll see how it goes from there. I think there's definitely any differences in selection or differences in shipping. There's a myriad of factors that go into a Prime member's decision to be a Prime member and to what they buy and what they use as far as our benefits that we give them. So I don't want to make too many sweeping comments on that right now.
Our next question comes from Brent Thill with Jefferies. Please proceed with your question.
Thanks. Good afternoon. I was curious if you could just expand on AWS. There was a little bit of a slowdown across the board in a number of the cloud numbers. I'm just curious if there's a common thread that you're seeing there, and perhaps just talk about the backlog. I know you've disclosed the backlog has been improving in the filings, but a little more color on AWS would be certainly helpful. Thank you.
Yeah, sure. I'll give you the backlog number. It grew 65% year over year and 21% quarter over quarter. So that's healthy, and we have the average contract length is over 3 years for our AWS contracts. I would say contract volume and negotiations are strong and have maintained through this period. So it is that's a good sign. It really does boil down to short-term versus long-term incentives here for a lot of our customers. If you're in an industry that's been heavily impacted by COVID in the economy, you're looking for ways to save money, and you're trying to do it quick. And we're trying to help in that regard. And one of the best ways to save money long-term is to use the cloud. Not only to turn it into a variable cost, could be a fixed cost, but also to be able to take advantage of the partner network that we have, the security that we have, and also the constant evolution of products and services that we bring to market.
Our next question comes from Aaron Kessler with Raymond James. Please proceed with your question.
Great. A couple questions. First, maybe just one of your competitors noted that growth was slowing in some markets that have opened up, I guess probably more in Europe. maybe just thoughts there. Are you seeing any changes in some of the markets that are starting to open up? And just any comments maybe on the Zoox acquisition, how you kind of can use that technology longer term as well? Thank you.
I imagine you mean on the consumer business, the countries
Correct.
opening up. Yes. Well, we still see strong demand, so I don't have any particular color on that regard by country. We do think probably the UK was grew very strongly in Q2, and that I believe is starting to moderate a bit, but still stronger than normal. So don't want to go by country, but I think those trends will start to perhaps become evident. But the from our vantage point, the Prime members still continue to order more frequently and in larger basket sizes.
Yeah, and then Aaron, just on your second question on Zoox, I mean, it's not too much to say at this point. It's still pretty early, but I think probably goes without saying it's a tremendously forward-thinking team, which resonates with us, and they really do kind of pioneer in that space, the ride-hailing space. So a lot of cool work they're doing, designing autonomous vehicles and focused on the passenger, right, in front of mind in that. So I think, again, just as we think about kind of the innovation components and commitments to solving kind of problems and challenges for customers, it's pretty exciting for us to be able to work with them and bring that vision to fruition in the years ahead.
Our final question comes from Justin Post with Bank of America. Please proceed with your question.
Great. A couple questions. Obviously, a great cost quarter on the leverage side. Any changes in e-commerce gross margins to call out? Is scale and getting size improving gross margins, or anything on the mix shift there that's interesting? And then secondly, we talked a lot about one-day investment last year. Obviously, the shipping times were impacted by COVID, but are you back to kind of normal times, and where are you on the one-day investment? Thank you.
Sure. On one day, again, we're first prioritizing employee safety. We have a lot of effort in that regard. We've changed over 150 process paths. We've instituted social distancing, cleaning, temperature taking, both with our warehouse employees and also our transportation employees. So that's really still priority one. And second is capacity expansion, especially as we head into the second half of the year, which generally sees a step up in volume even over the first half of the year. So we are improving the percentage of one day. We're not back to where we were pre-COVID. We don't think we're going to be back in the short run, but we will continue to improve it. And hopefully it'll be less noticeable for our consumer base. On the gross margin side, it's very much a mixed bag right now. There's, before the COVID outbreak, the positives were generally AMZL costs or delivery costs were becoming more efficient. Advertising and AWS were certainly a strong component of gross margin increases. Product mix could go either way depending on the country, but as this COVID has played out, consumables and grocery, which are lower margin, have started to have been a negative impact on gross margin. But we feel good about where we are. Gross margin for the quarter was 40.8, and what was down 200 basis points from last year. It's probably more tied to the addition of one-day shipping. And even though we didn't do as much one-day shipping as we've been doing post-COVID, the cost of one-day shipping are already built into our structure. We've already reconfigured our network. We've already created the capacity to be able to ship. It's just a matter of whether or not we can get it out through the warehouse and to you in one day or not.
Thanks for joining us today on the call and for your questions. A replay will be available on our investor relations website at least through the end of the quarter. We appreciate your interest in Amazon and look forward to talking with you again next quarter.
Sorry, my mic was muted. So, all right, guys. So that was the earnings call for both Amazon and Apple. Thanks for coming and hanging out with us. Hopefully, I see you guys in the future. If you guys subscribe, thank you guys for the likes. And the next ones I'm gonna focus on is gonna probably be Nikola, then Workhorse, and then Neo. Once those comes out, so those will be interesting. But good news. Hopefully, we'll see the stock all go up, especially NASDAQ tomorrow. So thank you again for the donations. I think Andrew donated $30 and Chris donated $5, and then Archie donated $5. So thank you guys for those donations. I'll see you guys next time.